Good evening. If you've just joined us, you're watching Stockwatch, and joining me at the desk this evening are Andrew Dittberner from Cannon Asset Managers and Gary Boyson from Rand Swiss. If you'd like to send questions, please do. You can SMS us, stock, and the question to 33814, or you can email stockwatch@bdtv.co.za. Gary, Andrew, nice to have you in studio this evening. Gary, if I may start with you. Markets higher, JSE, global markets, the VIX is at an all-time low. Everything's great.
It's wonderful. There's no problems in the world at all. Yeah, but I think this is feeding on from the US on Friday. We also had a very strong Japan GDP number this morning. It was a little bit behind expectations, but I think everyone breathing a sigh of relief in Asia. And then I think everyone catching on to the, I suppose, Trump optimism again around tax cuts, and that helping to lift markets across the globe.
Because there was a bit of wobble, a week or so ago, but now, you know, that seems to have been pushed to the back of one's mind, and people are still buying equity. Andrew, do you think it's all going to end in tears? Or, I mean, not to be overly pessimistic or anything.
No, I don't think it ends in tears at all. I think you've just got to filter out the noise, I suppose, and the short-term sentiment that Trump says something and suddenly there's this reflation trade that comes through. And then the next week, there's negative news out of wherever it may come from. We're not sure. We'll find that out next week. And then suddenly the markets are down 3%. At the end of the day, what you just got to, focus on is, the fundamentals of the underlying businesses that you're buying. Be able to see through that noise, and in the fullness of time, you will be rewarded. It definitely, I don't think, ends in tears. A lot of people might say the market's a bit expensive and it should have a pullback. That's a completely different debate. But no, I don't think it ends in tears.
Because I don't know if you've been picking up Seth Klarman, who's a hedge fund manager, very private person, doesn't often put out notes, and is regarded as one of the best investors. I think Warren Buffett, in fact, regards him as a really fantastic investor. He put out a note just warning about this exuberance as far as the Trump trade is concerned, and saying, to his mind, valuations are really lofty. So I suppose it goes back to your points of, if you buy expensive shares, just be careful. I mean, do you think shares have got overly expensive? Or do you think, Andrew, if I may start with you, I think go to Gary.
I think locally, when you look at the market as a whole, and I'm just going to focus on the local markets, if I may, it looks fairly expensive. If you just use naive sort of multiples, trailing multiples, I'm talking about PE ratios, that sort of thing. But when you actually dig deeper, I don't think it is that expensive. You've got a couple of very big companies, which we all know about, that make the market sit up and look fairly pricey relative to its long-term history. But within the market, I think there are some great opportunities, be it in resources, industrials, or financials. So yes, while there are areas of the market, and this will apply both globally and locally, that you should be wary of at this stage because of valuations, I don't think it's just a broad statement that markets are expensive.
Okay. Gary, your thoughts?
No, I tend to agree. Definitely, I mean, when you've got Naspers making up such a huge portion of the index, and trading on such a high PE, you are going to get some level of skewing of the data. But again, I've got to agree with Andrew. I think there's always opportunities, in the market, and I think what we've seen, especially over the last 2 years, is huge rotations between sectors as well. So you're seeing, certain sectors becoming very cheap and turning around. So I think definitely opportunities, within the sectors and as sector picks as a whole as well. I mean, if you look, let's look at offshore. I think the pharmaceutical companies are looking particularly attractive at this stage.
I mean, locally, if you looked at Bidvest, that came out with a trading update this afternoon, they're seeing a 4 to 5% increase in headline earnings. That's not great, is it? Surely, for where they're trading?
No, I wouldn't say. I think that trading update probably disappointed the market. I don't think we were expecting hellishly higher numbers, but maybe closer to 10%. Probably would have been more in line, but you must remember that Bidvest now, after unbundling the Bidcorp business, is now essentially a South African industrial-focused business. It's probably the widest diversified industrial business in South Africa at the moment. We're in a very sluggish economy at this stage. And I think then there's also probably a bit of a premium placed on Bidvest in the anticipation of corporate acquisitions, specifically maybe doing acquisitions outside of South Africa. And we obviously know that they're a hell of a good at making deals. They've proven this. And there's probably that bit of a premium. But given the valuation where it sits at relative to other South African-facing industrial companies, the trading update was probably a bit disappointing.
I mean, do you think that premium is justified, Gary? If you consider that maybe the last big big deal that Bidvest made under Brian Joffe was Adcock Ingram, which was a terrible deal.
Which was a terrible deal.
Being a terrible
deal.
Deal.
Agreed. He did admit it. And I mean, I remember when that first came out, I think the PIC was valuing Adcock Ingram at above 100 Rand, and we were sort of valuing it at 36. And we were like, we cannot work out how you're quite getting to these levels. But I mean, at least Adcock, I mean, both Comet and Adcock have turned around and run, you know, substantially. So I think that's fed into maybe slightly better prospects for Bidvest. But again, I think it's a company that's in transition as well, because with the unbundling, obviously, of Bidcorp, I mean, I think there's a big, I suppose, strategic focus now that they can you know, work with. But again, you compare it to one of the smaller companies, you compare it to something like Cap that also had results out today, and you look at that, and I mean, they managed to grow headline earnings. I mean, it was well ahead of our expectations. We were expecting about a 12% growth. I mean, we were looking for 23 cents, got 25. I mean, you're seeing real value being unlocked there.
Yeah, an 18% increase in headline earnings. Do you think that's also, you know, they're a smaller company, and therefore all, I mean,
it just goes back to Andrew's point in the beginning. I mean, they have real opportunities, but you've got to be specific in your stock selection.
Would you buy Cap International?
I think Cap, or Cap as some people refer to it, is probably very understated, and it's not talked about much. And you say it's a small business. It's a 20 billion rand market cap. You know, that's in line, not far off a Barlow World, for instance, you know. So it's a sizable business, and they've done exceptionally well probably over the last 4 or 5 years. I think they went through a bit of a restructuring a few years ago. And, you know, they were interesting then, and, you know, unfortunately we didn't go in, and they've continued to do exceptionally well. I don't think it's hellishly expensive. But it's not, I wouldn't say it's screamingly cheap, but, you know, we've seen what they've done. They've probably deserved the rating. You know, that industrial business, I think the operating leverage that was in there when you saw their top line growth in there, I think they grew operating profit about 50%. You know, that's a fantastic result. The one small, you know, concern for me would probably be the acquisitions. You know, they do quite sizable acquisitions, and we see the most recent one, Safripol, that they just did. You know, those are fairly big acquisitions, and you've got to get those right. If you have a misstep there, you can destroy value quite quickly.
Yeah. Okay. Clearly, my mind is 4 years ago, maybe when they were a smaller company than a 20 billion rand market cap. Oh, I haven't looked at that for a rather long time. Is Coronation a buy at the current price? So we had a good start to the year for markets. Resources have had a great year over a year basis. Coronation had bought Resources shares. What do you think, Gary?
I think whenever you look at Coronation, it's going to be, you know, in some degree linked to the equity market performance as well. I mean, we've seen 2 tough years in equity markets, but Coronation is also, as you say, I mean, they were moving fairly aggressively into resources a couple of years ago, and I think they positioned correctly ahead of 2016. So, you know, we haven't seen too much of a recovery in the share price at this stage. So I think they're not looking bad. I mean, if we do see this sort of little bit of tailwind that we've had for the last couple of weeks continue, and we see the U.S. market continuing to make new highs, I think Coronation it's got to catch up. I mean, it's a very mature business, obviously, and it's got an enormous amount of assets under management, but I think very well run, and still, you know, just because of its size, a very dominant player in the local industry.
I mean, 65 rand, it's kind of stuck there for a long time. Andrew, do you think it's also...
Yeah, I suppose it came off where we would have said it was extremely expensive not so long ago. And it probably looks, you know, more acceptable at these levels. What I really like about them is the dividend payment. So they essentially pay out 100% of their earnings to shareholders. And if you're looking for a very nice dividend payer, you can't go wrong with Coronation. And then obviously the performance fees that should also kick in. I think they've done fairly well recently, haven't been overweight resources. If those performance fees flow, you'll see the bottom line pick up and dividends flow.
Okay. Where's Anglo American going in the next 3 months? Is it a good buy at 231 rand a share?
Wow.
Let us gaze into our crystal ball. On the basis of what results they're likely to put out, and I guess they'll probably be coming out in the next couple of days or so. Andrew?
Yeah, you see, so now again, this is when I'd come back to the short-term sentiment. Like, I wouldn't be overly concerned about what it's going to do for 3 months. If you know, trying to make money in over a 3-month period by investing in the stock markets, you know, you're very likely to get your fingers burnt. So I would rather take a longer-term view. And I think for these resource companies, these diversified guys in particular, you know, you probably need to look at spot prices, you know, current spot prices, what that means for earnings going forward, if they can maintain current production levels, and get a sense of the valuation from that point of view. And based on that, I don't think Anglo-American, despite the fact going from 50 rand to what we're 220, I don't think it's hellishly expensive right now. I think it might still run a bit more. With all
Gary?
respect to Gary, sorry.
To the short-term traders.
To the short term, yeah. But looking at it, I mean, we've been, very, very negative on resources for a long time. And I mean, you see most of these companies have I think the reversals have taken hold, and you sort of look at it. And if you are trading short term, I mean, you can see the momentum in stocks like Anglo, Billet, and Kumba. I mean, all these resource companies are running. There's momentum behind them, and we're feeling it. Traders come, they buy, they make money, they get more excited, the exuberance builds. And maybe it will all end in tears, but for now there seems to be money to be made. Looking at Anglo specifically, again, it always, like any commodity play, comes down to, as Andrew says, the spot prices of the commodities underneath. It is very, very difficult to predict earnings. But I think, looking inside the Anglo stable, it's look at that momentum. I mean, you just draw a line. You don't have to be smart to read a trend. You can kind of see where that
No, I mean, but that is a fantastic chart, but I'm sure we're going to bring up, there we go.
Yeah, there we go. So if you had been
a bit of perspective.
If you had been a longer term investor, talking back to sort of 2010, and you had a 5-year view on Anglos, you're still down. You're still suffering on a long-term view. But definitely we're feeling a lot of short-term interest in the resource companies, whatever that means for the market. But
do you have any short-term targets for Anglo?
I don't have one off the cuff. But looking at it, I think again, commodity prices are incredibly important, but I think it's probably worth a punch short term. But again, we were looking at that investor clock that we spoke about a while ago. When basically resource companies bring down their their gearing, and they start to sell off non-core assets. That's generally the time in the clock that you get to just before dawn, and you should be buying. I mean, that seems to have been the case, and I think there's still some upside to go. Just if you look at the way that commodity companies operate, they go through a phase where they really take supply out of the market, especially the likes of Anglo, Billet, and Rio. These huge companies, they put shafts on care and maintenance. It takes supply out of the market. It buoys commodity prices, and that helps investors get more excited about the stocks because they become better investment propositions. The problem is that it's almost history always plays out, and as the cycle starts to turn up, they start to invest more heavily. They become less attractive players, and everyone gets their fingers burnt.
Okay, so maybe a few months left of joy. Okay, well, here's a question saying almost every commodity stock has been edging upwards, but Sibanye is going the other way. Why? An anguished why? They managed to raise debt as far as a bridging loan is concerned.
I see that. So, I presume, I wouldn't say they're the only ones to go backwards. If you look at the gold companies from the middle of last year, they've all come off sharply. They've obviously done that Stillwater, or in the process of trying to do this Stillwater acquisition in America. I think the issue with the market here is there's a lot of uncertainty because this acquisition is huge. If memory serves, I think it's about the same size as Sibanye's market cap. So they're going in to make a massive acquisition. They're not paying cash for it. They've got to raise debt. They're going to go to the equity markets, raise capital on the equity markets by way of a rights issue, which is now bigger than what it was when they first announced the deal in December. So, there's a lot going on there, and I think that's causing uncertainty for investors. And, hence the share price. I do think, however, that those Stillwater assets, they're platinum assets, from what I understand, is they're exceptionally high-quality assets. When you look at the grade, it's, substantially higher than anything you get in South Africa. So they're very high-quality assets, and hence it appears that they're paying up, and that's probably another, cross next to this acquisition. Raising debt's big, and you're paying up for it. So that's, those three together probably are weighing on the share price at the moment.
Gary, I mean, if it comes off, could it be spectacular for Sibanye if they get it right?
Yeah, I think there's no question it's incredibly ambitious, but I think, so Andrew sort of covered all the negatives of the deal. So I think,
question was why the share price
for sure. But if you look at the positives, I mean, it is a massive acquisition, but it'll also, if they do pull it off, it's going to make them, I think it's the third biggest platinum miner in the world. From a company that was, when Neil Froneman took it over, was a spin-off of Goldfields, which was really just the dregs of what was left in South Africa that Goldfields wasn't interested in. I mean, I think Neil's done a fantastic job. He's done very, very clever deals. And I mean, I think if you're going to back a management team, you'd kind of want to back Sibanye to pull a deal like this off. Maybe it's sort of, just the momentum, and maybe hubris is starting to build that it's to go for something of this size. But I think if they do pull it off and they manage to get it down, I think the upside is significant, especially if that, again, I don't think that this commodity market has quite run out of steam yet, and they have. I think they bought, the Amplats Rustenburg assets. They got in there at the bottom. So, I still think that it's a good time for consolidation in the industry, and I think they're making hay while the sun shines. So I think it can be very, very positive for the company, but obviously enormous event risk.
Yeah. All right. We'll leave it there for the moment. If you'd like to send questions through, please do SMS us or email us, and we'll be back after the break.